What's up, guys? It's your boy Quick Stocks. As always, remember to hit those thumbs to recharge my dopamine, and we will get right into your quick stock analysis of Tencent, ticker symbol TCEHY, trading for $55 a share as of June 1st, 2020, with a market cap or capitalization of over $514 billion. So, what's the move? Should we stick with our individually packaged stocks or go long on the complete box set that is Tencent? As, why would you only want to own one sector of one market when you could just own everything? Well, it seems that's Tencent's approach, at least. Before we get into your proper quick stock analysis, for transparency's sake, I did make a video a few weeks ago stating that I was actually going to be taking massive gains and selling out of a majority of my Chinese listed companies, including $10,000 in Tencent and Alibaba. However, pump the brakes. One should definitely not consider me taking some profit as me being bearish towards the company. Besides the political games being played, Tencent is in my top 5 favorite companies, at least from a growth perspective. And let me tell you why. Seriously, sit back and relax because this one is absolutely bonkers, boys. Tencent is the world's largest video game company who owns all of Riot Games, the creator of League of Legends. They also own a significant share of Clash of Clans, FIFA Online, Call of Duty, World of Warcraft, Overwatch, PUBG. However, Tencent is also the world's third largest social media company, only behind Facebook and Google. Still not your thing? Alright, that's cool. How about music? With a 10% and soon to be 20% share of the world's largest music record company, Universal Music. Or maybe 7.5% of Spotify. Still not sold? Fine. Can we at least all agree that e-commerce is where it's at? Tencent still has you covered with a 20% share of JD.com, which is one of China's largest online retailers. Oh, and is the country's biggest internet company by revenue. We're not done yet, boys. Let's add some more icing to that cake. Tencent is also a significant player in television, cinema, cloud, online payment processors, search engines, electric vehicles like Tesla or NIO, real estate, insurance, VR, comics, AI. Yeah, I think you get the point. So let's take a look at how Tencent makes its money. Man, of course we have to start with Tencent's gaming business. After all, they are the world's largest video game company, bringing in nearly $20 billion in revenue just in games in the year 2018. And I'm definitely not going to be able to cover everything under Tencent's umbrella, but I'll try to hit most of the big hitters. As Tencent owns 40% of Epic Games, who of course is the creator behind Fortnite, who brought in $1.8 billion in revenue for 2019. But it's only fitting that Tencent also owns 11.5% of PlayerUnknown Battleground, the creator of PUBG. Tencent owns 84% of Supercell, which makes Clash of Clans, Clash Royale, Brawl Stars, 5% of Ubisoft, 5% of Activision Blizzard, which of course includes Overwatch, World of Warcraft, Call of Duty, Candy Crush, and so much more. 80% of Grinding Gear Games, 15% of Glue Mobile, 5% of Paradox Interactive, 20% of Funcom. How about King of the Hill, FIFA Online, Rainbow Six, Path of Exile? And that one company. What's its name again? Oh yeah, Riot Games. Tencent owns 100% of Riot Games, which includes League of Legends, which is the most popular PC game in the world. Fun fact, Tencent tried to get Riot Games to make a mobile version of League of Legends. When the developers refused, Tencent went ahead and made their own mobile clone of League of Legends and called it Arena of Valor, which became one of the most profitable mobile games in Asia. And of course, Tencent owns a whole boatload of other gaming companies such as Jaeger, Frontier Development, Kako, Paradox Interactive, Fat Shark, Shark Mob, oh yeah, and Discord. However, it is important to note 60% of Tencent's $19 billion in gaming revenue last year came from mobile games, showing a market trend shift in gaming preference from console to mobile. And obviously, Tencent owns many investments in China that may not be familiar to foreigners, so I'll briefly go over a few. Sogu, an online search company, Wubu, an online classified platform, Cheetah Mobile, an app maker, Oh yeah, and they own 20% of the e-commerce giant JD.com. Social media. It seems like Tencent has its eyes on taking the throne away from Facebook as the world's largest social media player. Quick side note, Tencent also owns 12% of a social media company that we are actually invested in, which of course is Snapchat, which is kind of funny because you can't even access Snapchat in China. But let's be real, Snapchat is child's play for Tencent. They have WeChat, which boasts a measly 1.1 billion active users, and their other social media company, QQ and Qzone, boasts a measly 823 and 572 million active users. As we can see from these charts, Tencent may not have as many active users as Facebook, but its revenue is actually comparable. Cars and ride sharing. I know this will get most of you hyped. Tencent owns 5% of Tesla and 1% of NIO. But, of course, this is not all Tencent has its fingers in. Tencent also invested $1 billion in Ola, India's main Uber competitor, and it also put $100 million in Gojek, a motorbike ride-hailing startup that's popular in Indonesia. It's also important to note China is home to the world's largest ride-hailing market, which is worth an estimated $23 billion, and currently Tencent only has a small portion of this market. But this all could change as it's rumored Tencent is going to be teaming up with Alibaba, another massive Chinese company, to launch its own ride-hailing service. And knowing Tencent, I wouldn't be surprised if this is just the beginning. I could certainly see Tencent making many more sizable investments into this sector for years to come. Music. Not only does Tencent own Tencent Music, but as mentioned before, a 7.5% stake in Spotify and a 10% share of Universal Music, with a potential 20% stake by 2021. It's important to note, in 2014, Tencent established exclusive distribution agreements in China with several large music producers, including Sony, Warner Music, YG Entertainment, and Universal Music Group. And let's be real, any other company would be more than satisfied, but not Tencent. Tencent Music is a big boy all upon itself, with QQ Music, Kugou, and Kuwa, which have more than 700 million active users and 120 million paying subscribers as of July 2016. Tencent's music services are estimated to have a 56% market share of music streaming services in China. This video could seriously go on all day, but here at Quick Stocks, we're all about your quick stock analysis, so let's bust this out. Tencent has also worked with China's central bank to develop a central payment clearing platform for online payment. In 2006, Tencent launched its search engine Soso.com, which was a partner of Google. Tencent soon discontinued Soso.com after it invested in Sogu and replaced Soso.com with Sogu Search as its main search engine, which has around 400 million daily active users. And in 2012, Tencent launched Tencent Comic, which is one of China's largest online animation platforms, which is seeing releases in every market around the world. In 2015, Tencent launched Tencent Pictures, which is a film distribution and production company that creates and distributes films based on books, comics, animated series, and video games. But remember, this is Tencent. Why stop there? In the same year, Tencent launched Tencent Penguin Picture Production. Let's bust this out. We also have QQ Player, Tencent Traveler, Tencent Weibo, a micro-blogging service, and Tencent Video, a video streaming website. QQ Hawaii, which is Tencent's first venture into international real estate. 2017, Tencent launched its own credit score system called Tencent Credit. WeSure, an insurance agency platform, virtual reality headsets, Co-Innovation Labs, which develops cloud-based game platforms. But for the SparkNote summary, Tencent is the SoftBank of China, investing billions of dollars around the world in almost all of the major markets. And with all of this hype, I'm sure some of you are thinking, why would you sell your shares? I'll leave a link in the description. I don't want to cover everything I've already talked about. And for time's sake, I don't really want to get into the morals of investing into a Chinese company, which we've covered multiple times already. So with all of this in mind, what's the move? Like I said, I absolutely love the company. From a growth perspective, Tencent is top tier. And if US-China tensions calm down, Tencent is going to take off. It's going to be one hell of a race between Alibaba and Tencent regarding which will be the first large Chinese tech company to reach a $1 trillion market cap, in which investors in either company will make out like Robin Hood. However, there's a lot going on behind the scenes, and an investor in Tencent has to accept you are going to be in for volatility, be it up or down. However, the thing is, if these tensions calm down, Tencent or Alibaba, their share prices are going to skyrocket. That's the perk of getting into the Chinese market now if you so happen to be bullish on it. For myself personally, it wasn't worth having such a large amount of money at risk. For my account, I am more than happy with putting a few $1,000s in Tencent, as, like I said, it's a boss company. I will leave a few links in the description if you want to check more of your humble reporter's opinion regarding Chinese stocks. Anyways, guys, that's all I've got for today. As always, the best investment you can make is to go long on Quake stocks. Hit that subscribe button now at 320 subscribers and plan an early retirement. I will catch you guys in the next one.